Welcome to Beyond Bacalhau, Cracking the Portuguese Business Code by Raquel Batista. Hi, everybody, and welcome to the 9th episode of my podcast, Beyond Bacalhau, Cracking the Portuguese Business Code. Now, I am very excited today because this is an episode that I really wanted to record for a long time. This is one of my main subjects that I talk about with my clients. It comes up a lot of times in our meetings, in our consultations. It's an analysis that we really need to do before having a decision on whether it is better to create a company or to go the freelancing way. So I present you the episode about freelancing versus company. Okay. So there is a lot to talk about. One of the things that I want to do with this podcast is really give a tool to my clients and to, everyone else to be ready to create a company or to have a business in Portugal. So if you go through some of my podcasts, more technical podcasts, then you know what you need to do or what you need to have in order to have a business. So it saves you a lot of time. And of course, when you come to me asking for directions or asking for a consultation or asking to create a company, then that means that you're much better prepared and much better equipped to start really much faster on that track. So, one of the things that is right off the bat different is the fact that when you have a company, you create a whole different entity from yourself, okay? And this is the first fundamental difference. Um, it's not just you anymore. When you create a company, and we've talked about this, about the corporate income tax when we did the podcast on corporate income tax. So you create an entity, an organization, a body outside of yourself, outside of the shareholders that detain that organization, okay? And this body, this organization, this entity is going to have its own NIF, its own social security number, its own name, its own address. When we've talked about the basic elements of having a company, we talked a little bit about this. So go back to that podcast if you want to remember some of those stuff, but some of that stuff. So it is a different autonomous body outside of its own shareholders, okay? And in that sense, it's not you. So don't confuse your own personal finances or your own personal bank account or your own personal expenses with the company's. The company's main goal is whatever activity you created that company for. So let's say consultation. So the object of that company, the goal of that company is to operate on consultancy, is to provide services on consultancy. It's not buying a dress out of your bank account, even if the money that you've put into that company's bank account was your own. So what you need to know is that once you as a shareholder put the money in the company's bank account, it's no longer yours. It's the company's, and it will serve the company alone. It will serve the company's interests alone. Okay, so you cannot use that on your personal benefit. And sometimes people confuse that and don't know, okay, what type of expenses can I pay through the company? What kind of expenses do I have to pay on my own? It's such a special analysis that we have to do because it really depends on the business. And I think also I've talked about this in another episode, but I have, for instance, one of the examples that I always give is, okay, don't go buying a dress on Armani, for instance, on your company's bank account because that is a personal expense. But I have some clients that actually created a company with me and they're performers. And so obviously they can buy outfits or whatever they need to perform and to do their shows. So here is a crazy example where you really need to look at the specific circumstances of each business to see what expenses you can pay through the company or what expenses you cannot pay through the company. So different realities, okay? Your personal sphere of financing and assets, and then you have your company, okay? The company can buy houses, it can buy property, it can buy a lot of things, but when it does, they're not the shareholders, they're the companies. Okay, so this is the first fundamental difference between freelancing and company. When you're freelancing, there is no distinction, there is no different body, there is no different entity. So everything is, all the income is collected in your own personal income, your own personal financing. And actually, the other day, I was talking to a client doing a consultation, and I was drinking my water, and I think this is an exactly great way to exemplify what it means to have a different body. So this would be your personal money, so the shareholders' money, okay? And now this is the company. And the shareholder does put money inside the company. But once it does, the money is here. It's the company's. You can't use it for yourself, okay? And so the company has this money to operate, but it's no longer, it does not have anything to do no longer with the personal bank account of the shareholder, okay? Two completely different um, worlds and universes, okay? So that's that. When you're a freelancer, there's just this. So and using again the same example, I think this is a bit ridiculous, but whatever, let's go with the flow. When you're a freelancer, all the income goes to the same pot, okay? So you issue in your invoices, whether it is through the tax portal or whether you bought some software to invoice. And of course, by now you should know that you really have to have a certified invoicing software. But whenever you invoice, whenever whatever income you receive, it's all to the same pot. There's no division. And this is one of the things that I find, for instance, that made me, one of the reasons why I didn't go the freelancing route is there's no distinction. And I mean, you have income that comes from issuing invoices. You may have income that comes from, let's say you have a property that you're renting on a personal side, so it's not business, and it comes into that personal bank account. I don't know, someone pays you something, someone shares the bill of the lunch, it goes into the same bank account. And in the end, for me, that would be so complicated to differentiate income and expenses that are business and that are personal, that I just wouldn't be able to organize the different finances. And so that would in turn make it very difficult for me to find out whether my business was doing okay or not, or whether I was having too many expenses or not. So the fact that it was all in one bag, for me, it would make it very difficult to manage. So that was one of the reasons why I didn't choose the freelancing way. But again, if you're a very organized person, I'm the most chaotic person in the world, so that would be a no-no for me. But if you are an organized person, and if you can have different bank accounts, different personal bank accounts, you can separate the income and expenses. Of course, then even if you have different bank accounts, accountancy wise, it doesn't mean that they're separated. They're not. They're still, all of them, your assets, and all of them are income. So it is one of the reasons why I dislike that figure. uh, but you do you, and no judgment at all. One of the other aspects that is relatively connected with this one is the fact that when you're freelancing, legally you're not, it's not mandatory to have an accountant. So there are two regimes. Let's say there is a simplified one, it's under 300K of income annually. There's a simplified regime where you don't need an accountant. And there is another regime where you do need an accountant, but it's, way off in terms of income. It's a very high income. So the expense of accounting is not even a big issue at all. But the fact that you don't need to pay an accountant, which at first glance can seem like, okay, it's cool because it's one less expense, to me, it scared the hell out of me because again, if we're talking about everything going into one bag and without the help of someone professional telling me, look, you're going to have to file your IRS every month, or you're going to have to do that to retain part of your income every month. You're exempt or you're not exempt from VAT. Um, your social security, how are you going to process your social security to the average of the previous 3 months, but when am I supposed to file, when am I supposed to pay? There's all kinds of different deadlines, and the tax office is really quite strict. For instance, I've had so many clients that have registered as freelancers, and one of the common themes that I have with them is the freaking VAT. So when they register, there's a couple of tricks that make them either exempt from VAT or not exempt from VAT. And sometimes it doesn't really make sense that, for instance, one of the things that clicks the button to be not exempt from VAT is the fact that you may have operations with people outside of Portugal. Now, when you're registering for freelancing, it doesn't say if you do have, then you're not exempt from VAT. It only asks, do you think you're going to have, or will you not have? And so, in innocence, people will say, I don't know, maybe I will have a foreign client. Maybe I will sell someone service to outside Portugal. And so in their innocence, they click, yeah, maybe I will have business outside Portugal. Boom. So now you're not exempt from VAT, even if your expected income is below the 15K, which is like the threshold for exemption on VAT. So it has nothing to do with the amount of income. It has nothing to do with the activity itself. And it's not even a reality, it's probability. So in the end, you're much better off when you know how you do things, when you know how to register properly. You're much better off saying, no, I am only going to do operations inside of Portugal. And then if that situation occurs, then you can let the tax office know, look, hey, I was wrong. At the end of the day, now I have an operation with someone outside of Portugal. But at least until that moment, and if you actually do not end up having any operations with anyone outside Portugal, you're exempt. So this is one of the key issues that makes so many people not be VAT exempt without any reasoning truly that has to do with the activity, and that really doesn't bear any weight on the fact that they should be exempt or not from VAT or not. Okay, it's just, okay, probably I will have operations outside, probably I won't. It's not even a reality, so it's an expectation, and that expectation alone tilts, the scale from exemption to not exemption. So even if you have 1,000 euros of income that year, so I don't think that really makes sense. And so these are the types of complex situations or complications that are connected to freelancing, and that you don't have any help with because you don't have an accountant. Because if you do, that person is going to tell you, you have to register this way, or let's file every month this way, or now you have to file the periodic declaration of VAT, and this is how you do it, yada yada yada. If you don't have anyone on your side, which again at first glance is good because you don't have that cost, in the end, it may cost you a lot more, because even if you don't have any income, even if you don't have any income, but you're not VAT exempt, if you don't file the periodic declaration of VAT, you are eligible for fines, like 615 euro fines. That's not fun, especially when you don't even sell anything. Let's say you've registered, but you really haven't been able to sell any service. You don't have any income. Suddenly, you don't have any income and you have to pay. Okay, I don't want to scare you off. I think this is probably sounding a bit too scary, but I really do want you to be aware of this difficulty with freelancing. So you don't have any help with the tax, with the filing, with the social security, with the VAT, and this may mean fines. Okay, and with freelancings, a lot of freelancers, a lot of times, we're not talking about big businesses. We're talking about people that are not expecting that huge of an income. And so any fine, well, any fine hurts, right? But especially when you don't have a higher income, or maybe you don't have an income at all and you're paying fines. So that is really hurtful, and that can happen if you're not prepared. So that is one of the things that at first glance maybe may look like a good thing, to me is a very bad thing. And again, that was one of the other reasons why I didn't go the freelancing route, because with ADHD and all, I am the worst person to have control over admin stuff, over deadlines, or over whatever admin stuff. And if I didn't have help with that, I know that I would lose a lot of time organizing that. I would lose a lot of time in the tax portal, filing stuff. And I'd rather use my time to create business, to sell business, and not to do admin. So 1 hour of me doing admin costs me 1 hour of getting business and the income that that business would generate. So it's a double cost for me to waste time doing admin. Okay. So I'd rather have someone professional by my side. I'd rather not worry about that. I think that is a very well invested money. So to me, nowadays, because I have a company, or ever since I started a company, accountancy does everything possibly that they can for me. They issue my invoices, they deal with social security, they file everything, they take care of my expenses. Like, I just take a picture and I send them the invoices or whatever, and I do the least amount of work possible. Okay, because I want to concentrate on my business. I want to generate income. Now, the other difference, and that derives from the fact that, again, it's all on the same bag, is the fact that when you're freelancing, your tax is personal income tax. There's no corporate. Oh, sorry. There's no corporate income tax because there's no corporation. So it's all on your IRS. Now, if you're familiar with the IRS tax rates, they are a bit painful because they're a progressive tax rate and they can go up to 48%. 48%. And it's not that difficult to get to get to that higher tax bracket. Okay. So let's say 80K. You're right there paying 48% in tax, and let's not forget that we're not talking about Social Security still. So you'll have to put the Social Security bill on top of that. I mean, I remember in my banking years as an employee, I never even looked at the freaking salary receipt, because over half of what I made, of what I earned, went out the window in tax and Social Security. So if you have that notion that half of the year that you're working, you're not going to get that money in your pocket. It's kind of a difficult thing to handle. And I'm all for paying taxes. It's all that I did for over 20 years. I contributed with the absolute maximum for Social Security. But it, as a freelancer, if you're under that spade, it can really cost you the same as an employee. And as an employee, you have nowhere to go. You're just going to pay taxes, you're just going to pay Social Security. There's nothing that you can do. There's the IRS deductions that everybody has, like on e-fatura, but you can't really escape from it. So as a freelancer, you are exactly in the same position, with the difference that the income that is going to be charged with tax is a little less. And it's a little less because of the consideration that to generate business, you're going to have to expend, you're going to have costs. And depending on the type of business, the percentage may be different, but let's usually say that it's 25%. So freelancers are going to be charged on, sorry again with the mic. So the freelancers are going to be charged on 75% of their income. On the first year, it's even better because it's 50%, but let's say usually. But you're going to be charged on 75% of your income with that progressive tax rate. So, worst case scenario, you're going to pay 48% on 75%. Okay, so it can be a lot. So when that income starts to shoot, starts to grow, it's probably a good idea to look into creating a company and creating a structure so that you can have control over your expenses, because the business is growing, probably your expense level is going to go up. So maybe it's time to look at creating a company. Also, one of the things that may take the weight of the balance towards the freelancing is the social security. Social security on the first year on freelancing, you're exempt. You don't even have to worry about anything concerning social security. You don't have that when you have a company. You pay social security right away. So it is usually when people are starting, it may be good to go the freelancing route that first year, because if you have a lower expectation of income, let's say under 15K, you will be VAT exempt, so you don't have to worry about that. And you won't pay social security for that first month, so you don't have to worry about that either. So essentially, you'll only have to worry about IRS, and because of the expenses being an automated thing, you don't really have to keep receipts or take care of that. You know that whether or not, oh my god, Mike, whether or not you have expenses, you're always going to be charged on the first year 50%, but let's say the other years 75% of your income. You don't have to worry if you don't have expenses at all. I have a couple of clients that work on wood, and so they need to buy a lot of materials, and in that case they have a lot of cost. And so if you're freelancing, there's that ceiling for the costs that you can deduct. You can't go over those costs. If you have a company, there's no such limits. Okay, you can even have a loss. So if at a given year you have more expenses than you have income, you have a loss. If you have a loss, in principle you won't pay tax, corporate income tax. Of course, there's situations where you do end up paying a bit of tax. Let's say you made an expense that wasn't deductible, you are going to pay tax because of that. But let's generalize here. The expense level is something that you want to consider that may, make the decision between going the freelancing or the company route. Freelancing, 25% of expenses, whether or not you have them. So you don't really have to worry about that. But company, there's no such limit. So you can go through the roof with your expenses, of course, as long as they're deductible within the company. But they do count to decrease the amount of profit. Okay. So this is where the sweet spot is, I think, or the cherry on top, I would say, of the company. So when you're a freelancer or when you're an employee, this is something that I really explain every time. And I think that this makes a huge difference. It did make a difference from my previous employee life. When you're an employee and in my previous banking years, this is what happens. Even before you get your income, you are taxed. So you get your income already taxed. Okay, so income, tax right off the bat, and then you can expend that money. You can spend that money on your costs. Okay, so this amount of money that you have left, of course, is much less because it was already charged with Social Security and tax. With a company, it is the other way around. You get income, you spend your money on costs, and then you pay tax on whatever is left. And if whatever is left is less, then you're going to pay less tax because you're going to have less of a profit. Okay? This is the essential difference between employee and company. Expenses first or expenses after taxes. And this makes a whole world of a difference. I had a client really a couple of days ago where we intensively went through the expenses and we've studied the different scenarios between him being a freelancer and having a company. Why? If he did have the regular IRS, it wouldn't be even an issue because we were talking about a very high level of income, and that would mean that he would go right off to the 48% tax bracket. So, of course, were it not for a specific detail in his case, it would be a no-brainer. He would have to create a company. But I want to raise a flag here for people that have NHR because income in NHR, whether from salary or from business activity, is taxed on 20%. So it's not a progressive tax rate, it's a flat rate of 20%. So in this case, even if you're a freelancer, regardless of the amount of income, you're only always going to pay 20%. Now we're talking about 20% on personal income tax versus 21% on corporate income tax. When you're taking a salary out of a company, you're paying the 21% corporate tax, and you're also paying IRS and Social Security on the salary that you take out of the company. Okay. So in his case, even then, we went through the scenarios, we went through all of his expenses, and in the end, the thing that we concluded is there was a situation where in the company he would actually pay more money in tax, but he would have a lot more money left to use is if he created a company. So then the question becomes, okay, do I not want to pay more tax and be left with more money? So does it bother me to pay more tax but have more money at the end of the day? Or am I glad that I'm paying more taxes if at the end of the day I am left with more money to use on my personal side? So it was a good exercise that we did to really analyze everything to the detail, to the concrete of expenses, and to come to the conclusion that even then, even with NHR, it would still be beneficial to create a company and not go the freelancing way, even considering the Social Security part. Okay, so there's a lot that goes into the decision between one and the other. You really have to go down to the concrete. You really have to do the math. And of course, that is what I'm here for. That's what we did in this scenario. And I really advise you to find professional help to do that for you. So the fact that you have all the income coming to a bag also makes it difficult to control costs, because when you have an IRS, so it's a progressive tax rate, the bigger the income, the bigger the tax, and you can't control that. I mean, unless you stop selling. Okay, so if you don't stop selling, the more you sell, the more tax you're going to pay, and the more Social Security you're going to have to pay. When you have a company and you determine your salary, that is controlled. You know every month how much you're going to spend in Social Security, how much you're going to spend on IRS. At the end of the day, you're going to pay corporate income tax. So when you have a company, the fact that you can control your costs can be a determining factor to choose between freelancing and company. Because let's suppose that you have a great year that you weren't even expecting to have that, to sell that much or to have that much income when you first started. You are going to pay a lot of IRS because it's a progressive tax rate. If you create a company, you can have the biggest income in the world. It's still only inside the company, and you only take out in salary, excuse me, you only take out in salary what you need, and it's the same thing every month. That means that this can grow, but it has no impact on the personal income tax that you pay on your salary. Okay. And the other thing that it means is that you can manage the money that is inside the company. That's the other thing that I wanted to explain the other day to a client. Is he was very anxious and, okay, but I want to use the money, personally, and now I have a lot of money inside the company. And how do I use that money? Because it's the company's, it's not mine. Yes, you're correct. But then if you don't need that money personally, why don't you use that money to manage the finances within the company? Invest that money, use the company as an investment vehicle. At the end of the day, that company is yours. You're the shareholder of that company. So if the company makes money, you're still to gain. If you shut down the company, you are going to gain whatever the company has gained. Okay. You are going to pay capital gains on that, but let's not talk about those capital gains. So don't be that anxious to get the money out of the company in the sense that you think that you cannot use that money or that that money doesn't belong to you. It still belongs to you in the sense that you own the company. But if you keep it in that bag, you can manage and you can invest that money and you can make it grow within the company. It's still yours. It's an animal that is growing on its own. And there's a lot to be said about keeping on investing in your own business. Invest in training, invest in tools, invest in people. There's so many things that you need to scale and grow your business when you have a company, that really, if you want to do that, or really in the first years, you are going to need a lot of money to do those things within the company. The company will need the tools and the resources to grow. So if you keep taking out those resources, the company is going to be stagnant, and that's not what you want. You want to grow. And you know that even if you grow, first of all, you can grow the level of your expenses. Okay. Second of all, however much you grow, the 21% corporate income tax is going to stay the same, which is completely different than having a bigger and bigger and bigger income on a personal side. Okay. So please be aware of that. And of course, we've talked about IRC, so corporate income tax being the 21%, personal income tax being a progressive tax rate that can shoot through the roof. And remember, you still have to have into consideration that aside from that 48%, you still have to pay Social Security. So when I was in the bank, for instance, I was up on that 48% tax bracket. And on those 48%, I had to pay 11% on my salary of Social Security, because it's on the employee side to pay 11%, and it's on the company side to pay 24.75, as we've seen in the other podcast. So it was way over half of my money. And then if you want to be really obnoxious about it, whenever I went to buy anything, I paid 23% VAT. And I didn't do anything with those 23% VAT. I couldn't deduct anywhere aside from e-fatura, where you have family expenses, groceries, vet, mechanics, all of that things that you can deduct. But that happens in any case, whether you have a company or not. When it gets down to your personal income, those deductions are available to anyone that is a resident, that is a tax resident in Portugal. So even if you have a company and you get your salary, you're still going to have that benefit because of your salary. So you really don't lose anything. So that is a consideration to have in mind. Speaking of VAT, here's another huge difference between having a company and not freelancing, because as freelancers, you can also deduct the VAT in certain circumstances. Again, if you're not exempt from the VAT, of course, because if you don't charge VAT, you don't have to deliver VAT to the government. But that also means, of course, that you don't have anything to deduct to because you didn't charge anything. But the difference now here between a company or being an employee, if I personally go to pay to buy a computer, let's say, that computer has 23% VAT. And as an employee and using my personal income, I won't do anything with those 23% VAT. I have to pay that. That's it. I'm the final customer. I am the one that pays that VAT. So I deliver those 23% to the store that I bought that computer from. When I have a company, my company buys that computer and pays that those 23% VAT because my company is the final customer for that store concerning the computer that is bought, but I can deduct those 23% VAT that I've paid as a final customer to the VAT that I have to deliver to the government that my final clients paid me. So I won't go over this again because we've talked about this in the podcast about the main charges in Portugal. We've been through this in VAT, but look at the difference between buying a computer with 23% of VAT versus the possibility of buying that same computer and it's still me that is using, although with the hat of being an employee of the company, and having the possibility of the discount of 23% because I can deduct that VAT. So these are the fundamental things that I really wanted you to consider, that I really wanted you to think about. A lot of clients come to me, at the timing where they have to make this decision. There is a lot of things to consider, even if there's no rational reason for you to choose one or the other. There may be personal reasons why you don't want to go the freelancing or the company way. So you have to consider all of them. For instance, again, my personal example, I didn't want to have everything in the same bag: personal expenses, corporate expenses, business expenses. I didn't want my NIF, my personal NIF, with the business. I didn't want to do the managing of the expenses and the admin part all by myself. I wanted the help of an accountant. And okay, I didn't use that year of exemption from Social Security, but for me, I'd rather have that cost of not having the exemption, but having someone by my side helping with the tax filing. And probably the money that I saved in fines, was quite enough or even more than what I would have to expend if I was a freelancer. Okay, so take all of these issues into consideration. Of course, I am available. You can reach me through Instagram, through my social media, email, YouTube channels. You have a lot of ways to reach me. Please do, again, as I always say, have a professional by your side. That is an investment that is going to pay off, like I can't say that. So do make that investment, okay? Because it's better to have good, solid foundations, certainty in what you're doing, than try to wing it and then get slapped with fines. Okay? So see you next time. Thank you so much for watching or listening.